Welcome to another RES Wave update. In this video, we're going to look back again at the euro dollar versus the US dollar. Now, I've gone back and had another look at this, but this time I've also made it a bit easier for everybody to follow along with my analysis by making RES Wave free and accessible. You can access it if you just check out my profile. It'll have the links to the website. Basically, I have made it all free, so everything to do with RES Wave is now you can now learn it right at no cost, and this is so you can follow along with my analysis and the types of wave components that I talk about in my videos. So starting off, we can see back in the 70s up until 79, we had what looks like to be a three-wave move for B. It looks like a C wave move down, followed by a D wave move up. Now, if you get onto learning RS wave, you'll notice that there's only certain places where you'll find certain wave components. Okay, and they repeat all the time: large degree, small degree, the whole lot. Okay, so if you drill down, you just get more of the same based on the variances of each wave component. Okay, so if we're looking at this wave component, which obviously we can't see what happened before the 70s, right? There can only be there can only be technically three things that could be at play here long term. We could be in a wave E of a wave four, a wave two, or a B wave of a larger zigzag. Now, I wouldn't be surprised if it was a larger zigzag simply because of the boom and bust cycles that we go through, and also because of interest rates. Interest rates, if they keep going any higher, they'll basically be in a way, they are in a wave E according to my analysis. Uh, so will the euro be in a wave E at that point in time as well, and also the stock market and a lot of other charts I've noticed against the US dollar. Uh, the US dollar itself is in a wave E. Okay, it's in a wave E, except in the opposite direction. Okay, for the US dollar, it's more like a bear market wave E, where the last move up is a wave E followed by a big giant crash. Okay, so if that's the case for the US dollar, well, as soon as this pattern is complete, then we can expect, well, a pretty big reversal. Okay, so in my opinion, what does that mean? It means that in general, that once these rates hit where they're going, right, which is pretty high up in my opinion, we're going to see them reverse course all the way back down again. Um, so in essence, this move down, yes, it's long, yes, it's painful, but there's a couple of things to consider when looking at this pattern. Okay, if you look at the pattern right now in its entirety, up until where we are now, it could almost appear to be a type 2 weak wave E, even up until where we are now. For example, if this was wave 1, right, I'll make these drawings bright and green so you can see, and this is wave 2, 3, 4, 5, then chances are that this wave E could well be, it could almost be over. Okay. And that being the case, that means that pretty soon we'll see a reversal and we would have to see a break of the previous high from March 2021. But on the other hand, if we don't see that and we start to see a reversal that looks like it's corrective, meaning that the first move up is a wave A, a zigzag, it could even be a deep zigzag, right? We could see potentially what may fool people into thinking that, this is all over and we're going to see some huge rallies in the markets. The problem is, I do not believe that interest rates have gone anywhere near where they're going to go. It wouldn't, it doesn't even seem logical, especially if you consider the beginning of the zigzag down, which started in about, around the 1100 AD time frame, right? To get a wave E up, you'd have to get one in order to produce the wave C down later, which needs to be fairly long, fairly large, right, fairly deep. So to me, it makes sense that this wave E is probably going to go a lot further to the downside. Okay. Now, if I'm wrong, then we have to cross that previous high before we see anything else. We won't be able to see um, another leg down if we break up above that, right? Given the dynamics of how these waves operate, which I mentioned, you can check it out for free on my website and you can see for yourself what the hell I'm talking about. So, to take a different perspective and to assume that this could be a type 2 weak wave E, this means that each wave, right, subdivides into a zigzag, right? The zigzags are all the same, right? There's only two patterns in a market: a zigzag and a five-wave move, right? And they all happen in certain orders. And when it comes to this particular wave here, a zigzag won't cut it. A weak five-wave move may cut it, but like I said, we'd have to break up above that previous high. So what do I think is the other potential? And that would be that we are in a wave 3 zigzag, right? So just like we saw up here from 2008 down to 2015, we had an ABC, right? I believe that after basically right now, we're in the first part of the next zigzag down. Okay, so wave A here, similar to wave A here. And then we'll probably get a corrective part of this move, right? That will produce some kind of similar pattern, and then we will get a thrust down for wave C that will probably be another sharp move down, right? Now, don't mind the markings, that's just extrapolating from the previous move. This one could be quicker and sharper, or it might take its time, who knows? But in seeing this type of thing, right, that means that we'd have to get a wave 4 and a wave 5 zigzag. Okay, wave 4 would be corrective, just like I showed you here roughly. It'd have an A, B, C, D, E in it, and then we'd have a wave 5 zigzag, which would look like yet another zigzag, right? As long as wave 5 isn't the longest, because it's not allowed to be, then it doesn't really need to be terribly large, and it doesn't have to go as far down as what I've marked here. And it certainly doesn't have to take the time that it looks like it would take all the way till 2040. Obviously, that would be a worst case scenario. But my main point here is that where are we in this pattern? And I believe that the the best time to trade this current move down in the euro would be to wait for the correction to occur, right? Whether you believe it's a move up that's going to break the previous high, or whether you think it's going to go lower, there is still time. You're still going to have to wait to see what the next move entails, right? If we start to see a zigzag up and a zigzag down, the chances are that this thing is just not going to go up yet. Okay, so this particular piece of analysis, I did it in conjunction with redesigning the website and getting my methodology on there for free, just so that you can explain the complexity of this particular kind of move. because it is one of the most complex moves out of all the variances of wave components that make up the RES wave pattern. So, if you're interested in finding out just how complex that looks when it's drawn out in a diagram, then by all means head over there and check it out just so you can see what I'm talking about in its complete form. Um, so basically, when it comes to this type of thing, right, there's only one possible scenario that can happen once this is complete, and that the whole move is retraced all the way up to the but back up to the highs, right? Now, depending on what this entire pattern is, more than likely, I would say that it would be probably a zigzag, a large zigzag pattern. There's no way to know how large, but I don't think at this point anyway that it's anything else like a 5 wave move, like a wave 2 or a wave 4. And the reason for that is simply because of the bond yields, right? The bond yields need to move in a specific way, and right now bond yields to the upside are in a wave E. And I'll just go to the US dollar chart now. All right, the same thing in reverse is happening here, right? And this is, for me, this is particularly curious because if the US dollar is in a wave E up higher, well, that kind of really does align pretty well with interest rates and the bond yield. So for the US dollar to continue to move higher in line with the bond yields, to me that makes total sense because that's basically taking away the stimulus from the economy that drives, the big rallies in the stock market. But it also will probably have an impact, a negative impact on the stock market and cryptos. So I do believe that, these times are very unique in that interest rates rising the way they are in this manner will lead to huge problems economically. But then once we hit the end of that wave E, I do believe that we will see an extremely large moves in the stock market in terms of bullishness and cryptos. So I find this to be particularly interesting at this point in time, given that we are in what appears to be a recession and cryptos have taken a pretty big hit. So I won't touch too much more on the other markets because I'll be producing separate videos. But for now, I think, it would be wise to learn the waves and to sort of see you know, how the possibilities can be determined if you know the only kind of patterns that you're going to see in the market, the only kind of possibilities that can, occur, just due to understanding how each pattern relates to each other. And it's as simple as that. For me, all charts have fractal patterns, and it's pretty clear when you look at them. It's just about identifying where in the pattern we are in terms, of each component. And right now, everything's looking bearish except for the US dollar and bond yields, interest rates. Okay, and if I'm not mistaken, we're in the middle of it all. Okay, there might be a little bit of relief here and there, but in my opinion, we are right in the middle of it, and we're probably going to see a lot more pain as we trace out this really complex wave E, very choppy, very uncertain times. And I find that wave E's are the most confusing and complex choppy waves that you can find, and sometimes they just confuse people. So coming to this, having come to this conclusion, is the reason why I decided to just make it free, because it would be good if more people understood or understand what's going on. So that might help you, that might not. Whatever, there's always other channels you can go and watch if that's your thing. But yeah, I'll be doing my part to track how this all plays out according to the very rules that I have laid out before you, if you just take the time to do your research. So hopefully you found this video interesting and informative. Thank you for watching.